Heads up traders, I want to put a volatility event firmly on your risk radar, and that's the Nord Stream 1 decision from the Russians, which takes place after maintenance finishes on Thursday, and we could see some headlines or a lack of headlines which could drive big volatility in euro dollar, euro crosses, Germany 40 and European equities more broadly. If I look at European implied volatility, 1 week implied volatility, you can see that circa 15%, which is about a 52-week high. So the market is anticipating big movement in European assets over the coming week. You can see implied volatility pulling away from realised volatility as well. Now that could be down towards Mario Draghi in court. You could see the ECB meeting in play. But of course, I think for me, the biggest one which could drive huge spikes in inflation expectations, huge drive of economics going forward is what happens with Nord Stream. Now I think we've got to keep our eyes firmly on the anticipation of inventory levels coming through in natural gas storage. The market at the moment, they're around 66% of capacity. The EU Council want them to be close towards 80%. And I think that's really what's going to be called into question. So for me, the playbook around this is if we were to see after the maintenance is finished, the Russians decide to leave the taps off, then obviously the market's going to be quite nervous that those inventory levels are going to be depleted going into winter. In that situation, people talk about lower consumption and effectively the idea of rationing going into that winter situation. Of course, we look at European natural gas prices. If they were to go towards 200 euros per megahertz, then you could see euro dollar coming off pretty sharply, trading into 98 cents or below. You could see European equities under big pressure as well. And I think there's a high probability that we can see this situation. The longer this goes on for, the worse obviously it's going to be for the perception of economics. The second playbook, of course, is that we see the flow being turned on and it gets to about 40% of capacity of the pipeline, which is where we were pre-maintenance. I think in that situation, you could see a light relief coming through in European assets, European equities. Euro dollar pushes nicely into 102 and European gas prices come off a little bit. The third scenario, which is firmly less likely than any of those, is that we see full capacity being brought back on, in which case you could see a strong relief rally and a big move coming through in European assets. Either way, if you have a look at implied volatility in euro at the moment, it's very high. The market's expecting big movement, which has big implications for your risk. There's going to be big moves playing through, big headlines to contend with. Trade them with Pepperstone.